Hello everyone, it's Crimini and Tina.
Hi.
Welcome to the channel. Hope everybody's having a great day and that you are in the best of health.
Yes, with health being most important. So today, I'm giving in. I'm going to do it. I said I wouldn't do it.
Very important. This is one of the most important videos I think that we've ever done. And especially you guys that are moving from the matrix, going overseas and staying overseas.
Yes. So I said I wouldn't do a tax video. I tried to stay away from giving tax advice. This by no means, I am not a
tax advisor.
Yes. So seek professional, but I will give you what I do know. You take it from there. So to tax or not to tax? One of the biggest questions that we've gotten from viewers and subscribers is, do I have to file taxes as an expat living in fill in the country?
Right.
But I'm from the United States. I'm a United States American citizen. Okay. Are they required to file taxes?
Yes. The question is yes.
100%. As long as you hold a passport, meaning you have not denounced your citizenship to the United States, you are required by law to file taxes, federal and state, if state is required in your state that you live in.
Right.
Now, if you don't believe me, grab that nice little passport that you've been using, look in the back pages, it tells you that right there. So the answer is yup.
Yes.
The only exemption to that would be is if you're tax exempt because your income is under $12,000, which that's what it would be whether you were living in whatever fill in the blank state in the United States or you're abroad. If your income is under $12,000, you don't need to file taxes. You just prove to them that it's under 12 and boop, you're exempt.
You're exempt.
So here we go into what, how, and why. So if you are overseas by April 15th, I don't even think a lot of people know this, you get an extension date automatically from the IRS. I honestly did not even know that. But in this year of COVID, we didn't have to file until my birthday, July 15th anyways.
Right.
So they kind of gave it to you and some. But normally, if you are overseas, meaning you are out and can prove to the government you were not in the United States on April 15th, you get an extension date until June 15th. You just have to include a statement, proof, and submit that with your taxes that you were overseas on April 15th, so you were unable to file your taxes on time.
Right.
So that's number one that a lot of people don't know. Number two, as an overseas resident, you have an overseas exemption allowance. So if you have been overseas at least 330 days, take advantage of your overseas exemption. Last year, the overseas exemption, let me get my notes so I tell you correctly, was $105,900 that you could have exempt income from tax. Next year, 2020, because you'll be filing in 21, so 2020's exemption is $107,600. So if you're making under that, take advantage of the exemption. Now, there are two tests that you can take that the federal government requires to give you that whole
tax situation.
Well, they give you to prove that you were actually bona fidely, you really did live in the U.S. That you lived abroad.
Right.
Okay.
Abroad.
So the first is the physical presence test. That means you were physically present temporarily. This is a temporary status in a foreign country for at least 330 full days during that 12-month period, most of which needs to include the year in question. Meaning that that would be us.
That's definitely us.
Yeah, we would say, well, because we've been here a year and a half, that the entire year of 2019, we lived abroad. We can prove that we lived abroad.
Right.
We were not living in the U.S. We were living in the Dominican Republic. So fill in the country or countries that you've been in. And we were not there in the United States. So we would fall under the physical presence test.
Right, absolutely.
The only other test is the bona fide residency test. And the only reason that I say we wouldn't fall into that is that that's when you have lived for a full year, but you have also, you're shifting your tax abroad with no intent to return to, and that's what the IRS looks at. So they start looking at, all right, so now you're living abroad, but where's your visa status in that country?
Right.
Have you applied? Do you have it? Do you have a temporary status?
Yeah.
What's up with that?
What's cracking?
Then they also want to know, have you sold your home? Or if you haven't sold it and you're renting it, are you renting it or is it just sitting? Where are you residing for real? What's your physical address? And they look at local bank accounts, they look at church affiliations, they look at a lot of things just to prove that you are not actually still in the U.S. but saying that you're in the Dominican Republic so that you can get that tax exemption. So that overseas exemption, look into it. That's a lot of money that you're missing out on that you could be claiming as tax-free. Now, then if that is not available to you, there is also, or in conjunction with, there is the foreign tax credit. Now, we all know that we get our tax credit individually or as a married couple, us.
Right.
You get that little exemption, that amount that is not allowed to be taxed, and that's how they figure out your taxes. Those of you that do your taxes or have had them done and you actually pay attention to what's going on.
Right.
Everyone gets that exemption. You get it so much for kids, blah, blah, blah. Well, you can also get a foreign tax credit. Now, that is only, though, on money that you make in another country, meaning that if Eric was out here working at a job here and he's being taxed by the Dominican government, he can get that money that he's already paid taxes on in the DR excluded, because the U.S. is one of the only countries that combine the money that you make in another country and in the U.S.
Right.
They try to get their little greedy hands on all income made by U.S. residents. So if the amount that you paid in taxes in your country is larger than the tax credit that they give you or allow you in the U.S., then you would want to take the foreign tax credit. It's the bigger amount to get it excluded from your income.
Right.
So there is that. Remember, for example, we found out in Germany, they pay a 40% tax. That's insane.
You want to live there, boy. I tell you that. I love the
You
country,
got to be making really good
but
money.
You don't want to live there.
Yeah, you have to be.
Shoot.
I mean, I would have to be making buckets of money to be able to afford a 40%
Yeah, I don't think
tax
so.
credit.
I don't think so.
But if, let's say, you worked in Germany, we were living in Germany, and they did take that money out of you. So then you would use all that money that you paid in taxes towards the German government as your tax credit in the U.S., because that would be extremely higher than what they give you. Now, remember that the foreign tax credit does not apply usually to your state tax. So state tax is a separate issue, and we will get into that because you guys are going to really want to hold on to these gems.
You better believe it. Better believe it.
So if you make over the offset, which was what I said earlier, the overseas exemption, meaning you make over that $107,000, you can take in conjunction the foreign tax credit. So remember that. You want to protect your money. You will not be double taxed. You want to look at all the exemptions that we mentioned. Look into every single one. My biggest thing is find a tax preparer that does exclusively and has worked extensively with expats and other countries. Because if they are not familiar and it's your run-of-the-mill tax preparer that's in the States, he's not going to be equipped to be able to file these taxes correctly and maximize your best benefits. So remember that when you're looking into it.
Very important, guys. Very important.
Yeah. Also, you want to look into FBAR. This is another thing we've gotten questions in. I want to open an account in another country. I want to take all my money from the U.S. and I want to bring it into that country. Now, I have said a million times why that's not a good idea here in the DR. And the only reason that I've ever said, and I stand behind it, is because of the fluctuation of the exchange rate. Had we came when it was 50, that's when we landed, and put all of our money in, we would have missed out on the money and the fluctuation of the
DOP.
right, which is at what right now?
58. 58, 55 right now.
Right. So, I mean, you think, oh, it's only 8 pesos. But when you're timesing that by however much you're bringing over, 10,000, 100,000, whatever, that is a huge amount of money you're missing out on.
Yes, it is.
So I say bring over what you need when you need it, no more, no less. Because remember, with FBAR, it's been in effect since the 70s. It is Form 114, if you all don't believe me, in the Treasury Department. And that is that you have a total of bank accounts, investment accounts, whatever it is, that it has to be under $10,000 or else they want a piece. They want to know, and you have to report it. You have to report that to the Treasury. That is a law that is in there. It's been in effect, like I said, since the 70s. You have to go to the Treasury Department website, look at that Form 114, and that has to be filed also if you are bringing over more than $10,000. And that is not per account, that's combined. So say you have 3 accounts and all 3 accounts have $4,000 and you're like, I'm not over 10. Technically you are, because 4 accounts times 3, I mean, you know, 4,000 times 3 is 12,000. So you are over the 10,000 threshold. So be cautious of that. Know the laws, because knowing is power. Now, also, there is the whole thing of your state taxes. Crucial.
Wow, this is a big one here.
If you are in a state that has physical residency where you only need to pay taxes if you're physically there, no problem.
Right.
If you're in a state that doesn't have state taxes, like we came from Nevada,
Right.
no problem.
You're good to go.
But we know a lot of our viewers that reach out at least and talk to us about coming soon are coming from New York.
New York, New Jersey, California.
So when you're coming from states like that, they have state tax. To which, if everything that you have is tied to that state, meaning I sell my house in New York, I pack up and I'm moving to the DR, boom, I'm done. No, you still owe taxes on everything that you earn to the state of New York if that's where you're leaving from. Meaning that's where you held your license at, that's where your bank account is, that's where everything is, it's all in New York. So here we go with this. If the state has a domicile rule, meaning you can only have one domicile at a time, but you're holding your driver's license in there, your voter's registration in that state, etc., they may not accept the foreign tax exemption, and that state can tax you based on your earnings. If you're trying to escape New York taxes, you're never going to escape it if you just run out of New York without changing your residency to a state that has no taxes.
Right.
So my just advice, do what you want, is that before you go abroad, you start making ties in one of those taxes that are tax-free, one of those states that are tax-free.
Right.
So if it means you take a trip to Florida,
that's closer to on East Coast to New Jersey people and New York people too.
And you open up an account there, or you use an address there to open your bank account. You get a license there. You know, Nevada is, Washington is. There's not many states that have no tax, but you have to start establishing your ties in that tax-free state to get away from state tax, or else every penny you're earning in investments, in retirement, in whatever is going to be tied to the state you left at that tax rate that you're trying to get away from.
Absolutely.
So then what are you really accomplishing if you're trying to get out of, what they say, that New York is one of the highest tax brackets
in the world.
You're not getting away from anything. You're still paying state taxes. So do your due diligence, cut your ties with that state, get into a tax-free state, then make a transition over. And then you won't have to worry about state taxes.
And the same thing, you guys live in New Jersey, and especially that big old tax state in California. Especially. Now, there's other states that are in the United States that are not tax states, okay? They don't tax your brains out. But some of these states, it's like a ball and chain. When you try to leave and get away from them, you still got that ball and chain. So you got to handle your business. If you know you're going to move offshore, you're going to stay in another country for the rest of your life, whatever, make sure you handle your business and get it done and get it behind you.
So that's going to be one of the huge things when you're preparing to leave. I call it the grand exodus. When you're planning everything to get out from under debt.
Right.
That is essential that you include that in the plan.
Absolutely. That's got to be a part of it. A lot of you guys don't know this information. You're getting it here from Caribbean E and Tina, so you guys can be aware because it is your future.
Yes.
And if you want to have that ball and chain tax you for the rest of your life, that could be a problem and stop you from really having a better life somewhere else in another country somewhere.
Yes. And that's, again, why I say that also getting that tax preparer who has done foreign tax returns before, that he's knowledgeable with the ins and outs for expats, that is key, because a mistake can cost you more than taking the time to just pay a little bit extra to somebody who has the knowledge. It's like you have a backed up sewer system in your house. Are you going to pay Johnny that'll do it for $10? Or are you going to pay Roto-Rooter who's going to come in for $100? Well, Roto-Rooter might be best suited, but you don't want to pay the money. But you're going to pay in the long end when Johnny screws it up, and Roto-Rooter still got to come in and do it.
Got that right.
Just saying.
For sure.
And just to give you an average of kind of the costs, because like I said, we've looked into, because we are going to use a foreign tax guy, it can be anywhere from $200, $250 to all the way up to $500. Sometimes in the thousands, but it depends. What are you having them do? How many forms do they have to do? Do you own a company? Do you own a bunch of investments? Is it just like us, where it's just a couple and we have a pretty simple, tax return? It's just we would like to maximize our credits. Let me tell you, getting all my money back and using those exemptions is much more important to me than spending $250 outright to somebody who knows what they're doing. I will gladly fork over $250, $275, whatever, to that guy, because it'd be worth it in the long run when you get the money back. And remember this, when you make a mistake with Uncle Sam on your taxes, they charge you all of the months that you made the mistake, the interest on that, they make you pay the fees and everything else when they audit you. So better to be done correctly, not get audited, and give them more money. There's just no way. So to cover that all, remember that yes, you do have to file federal and state taxes unless you make under $12,000. Yes, there is an overseas exemption allowance. Take advantage of it. Have the right person prepare your taxes. And if you are working in that country, look at the foreign tax credit as well if it is more than your U.S. tax credit. Remember the physical presence test, and remember the bona fide residency test. The bona fide residency test is like 100%, like as long as you stay out, you have it. Once you go back, you don't. But the physical presence test is if you think it's going to be temporary or you've not filed for that visa / other citizenship in that country. So that's everything. Hope it helps. Remember about F-bar, what you know could hurt you.
And you know what? Basically, what we're trying to say is that you don't want Uncle Sam digging into your pockets the rest of your life. And he will. And the IRS number, they can tell where you are because they can tell your transaction.
Yes.
All your transactions in another country, if you're in Okinawa somewhere, you're in the Philippines, and I ain't talking about Guam, because that's part of the United States, or Puerto Rico. That's still the United States. But I'm talking about somewhere like the Dominican Republic, somewhere like Portugal, Spain, Greece, Egypt, Okinawa, Japan, places like that. Okay, they know that all your transactions are in that country, from credit cards and everything. Then you consider all good. But if you're gonna be coming back and forth, stay overseas for 12 months and then come back for 6, you're shooting yourself in the foot.
Well, that's when you would do the physical presence test, because then you would be living for the 300 and some days in another country, but you're coming back to the U.S. But most of the expats are gone and gone for good. I mean, there are special circumstances where maybe things don't work out or something happens. Physically, they have to come back. But for the most part, you guys know what you're going to do. You know your plans. And the question is to tax or not to tax. So there's the answers.
Especially you guys, and I know our personal friends that's following the channel from New Jersey. New Jersey is a high tax state. Okay, and it's connected to New York, Holland Tunnel, bang, another tax state. And there's a few others too. But you got to do your research and do your homework, because that's up to you. Because the money you save is your money. But the money you don't save, guess who gets it and keeps it with a smile on their face? Uncle Sam.
Yeah, we didn't have that problem because we came from Nevada and we don't have state tax. So
I love it. I love it. I love it.
we lucked out, quite frankly, because
better
had I
believe
found
it.
that out, I probably would have went to Florida and been like, well, we're getting a freaking state ID card or whatever because we don't hold licenses or anything anymore. So
Yeah, absolutely. Absolutely. So there it is. You guys got it. Don't forget, put your comments in the remarks column because I know you're going to have some questions.
But if you do, you can always go to irs.gov. They have everything planned out, but my best advice is to contact a tax preparer for expats.
And there's a lot of them out there.
Google it.
There's a lot of them out there. You can Google it because I guarantee the information the gems that we just dropped on you, I bet you a lot of people that's been overseas for 5 or 6, 7, 8, 9 years and haven't done it yet.
Or the ones that have that were smart can say 100% they're right.
Right.
So.
Absolutely. Absolutely. So, like we were saying in the channel, in the meantime, between the time, life is to be enjoyed.
Yes, make sure to hit subscribe and hit that notification bell so that when we have things like this, we can get you informed and you can know, because knowing is half the battle.
Right.
Make sure to hit like, please, if you like this video and others, and stay tuned for more gems that will be dropping like this.
Drop it like it's hot.
All information is always underneath the videos on how to contact us and how to patron the channel. We thank everyone who has patroned and who sticks beside us to bring this content to you.
Right. And just this one video right here, you're going to save you a whole lot of headaches and a lot of money in your pocket.
Yes.
So don't forget, show some love. Peace.